Welcome, traders. So, today I want to talk about how to identify and trade key levels in the market. But for the purpose of time, the video is going to be split into two, meaning this video is going to be just one part of it, while I'm going to make another video that is going to teach about how to trade it. So, today I'm going to talk about how to actually identify key levels in the market. And this is a problem that most beginners are going to feel, most beginners face, because I understood, or I also faced it when I was a beginner. All right. So the first thing you see that most beginners just keep trying to predict key levels by drawing different kind of lines, and those kind of things. At the ending, you find that the chart is messy. Okay. You don't really have to draw lines like this for you to identify key level. In fact, trying to do this, you are basically confusing yourself. Okay, you are confusing yourself if you try to do this. So today I want to give you an easy way you can actually identify key level in the market. Okay, now once I want you to know that one, your key level depends on the time frame you are working on. Okay, it's very important, and I always talk about this and I teach about fractality. Okay, the market is fractal. So the key level I'm looking at is going to be a lot dependent on the time frame that I'm working on. That is the first one. Now, secondarily, which is the major rule, is that there can be a reaction if there's no reaction. Okay, I know it's funny, right? I'm going to explain that. There cannot be a reaction if there is no reaction. Meaning, for me to predict a place where there's going to be a reaction, well, I should have seen a reaction. We're going to see it in the chart. So, if the market is moving like this, okay, and going like this, or let's just say the market is moving, okay? If the market is moving like this, I can't really predict where there's going to be a reaction until there's a reaction. So market is going up and doing like that. I can't just say, okay, when it gets to this place, there's going to be a reaction. Except there's a previous reason somewhere behind that will show me or tell me that what there's going to be a reaction at this point. Okay. So let's quickly go into that. Let's not waste so much time talking. So let's go to the practical part. So let's just look at this chart. Okay. Like I told you, the first rule is that what is way dependent on the time frame you are working on. Okay, and you can see this is a daily time frame because the JPY a daily time frame. And how do I identify my key levels here? First, to identify key level, we have to look for a place that have a previous reaction. Okay, now let's take for example when this market was going down here, where were you thinking there's going to be a reaction? Okay, some people might bring out here. You see, at the end they find out that they just keep messing around. Okay, why some people, depending, sometimes some people could expect here. Okay, first, you understand, first. But if you look at it from a general aspect, the big aspect or the bigger view, the place actually expects a reaction here. Now, let me clear some things out for the advanced traders here. The advanced traders here, of course, you could have been looking at order block here. Okay, at this portion for this daily time frame. Okay, and if this place was broken, it could have been looking at the higher time frame order block, which would have been probably around here, I think. Okay, because if this daily time frame was broken, let me say my first order block was here. Now I'm talking to the advanced traders here. Now, if I begin now, of course, you might not understand what I'm saying now, but I'm going to come down to your level. So this would have been my order block, right? If I was using order block, okay. Why? When this place was broken, I would have been looking at, let's say, a weekly order block to hold, and that weekly order block is where if you want to look at this market fractally, you say that this market actually did this. So the other block would have been somewhere here. Okay. So you say that everything is actually working together. My other block would have been at this point. From the weekly time frame now, my other block would have been somewhere around here. And you can see that that's where market reacted to. Okay. So you guys understand how that block was. And like I said, I'm talking to the advanced traders here. So at first we were looking at, say, this portion, right? And after this portion was broken, you're looking at, okay, where is the next available order block? You go to a higher time frame to go and check, and then you give you this. Okay. But we're not talking about order block, any of those stuff now. I'm talking about you looking at it as a beginner or as anybody that just come to the market without knowing any concept at all. How do I know? that the market is going to react somewhere. You know by what? Previous reaction. Okay? So if you look at this chart or you look at this portion and you look when's now you started going down, the place that my brain is going to tell me that the place will actually expect something to happen is here. I getting it? Is here. But if this place did not exist before, I would have not had any place to be looking to. That's why I said for there to be a reaction, there has to be a previous reaction. Because if there was no this, there was no reason for me to be looking at somewhere here too. Do you understand it now? That is where that rule came from. And like I said, it's dependent on your time frame, because if we were to go to a lower time frame to look at these portions now, you'd have seen that there would have been other reasons for us to look at all these small zones. Like I told you, it's dependent on your time frame. So I'm looking at a daily time frame here. Okay. And since there have been a previous reaction here, when the market started breaking down, I would have been looking at somewhere here, identifying key zones. Right? So what happened? Eventually the market came to that portion and reacted. Now, what I tell you is that that the market reacted once does not really tell you that is a key zone. We usually want it to give us a third reaction. That makes us sure that this push is actually a strong level or a strong zone. Be a strong support or a strong resistance. Do you understand it? Identifying key levels in the market. Okay? So remember, it's dependent on time frame, and secondarily, there cannot be a reaction if there was no previous reaction. Now, let me give you a simple example. Okay, something you have to get. In fact, if you're watching this video, you should get this. Now, if this market is now going up now, before I even proceed, what would you look out for here also within this portion? Okay, first I'll be looking at since there have been a reaction here, here, and here, well, it's very likely there could be another reaction here. Okay, let me take it up a little here. So it could be a zone, or a key level that you should be looking out for, that there can be a market reaction. And the thing about key level is that key levels is where you take trades from. You don't just take trades from anywhere. You don't just take trades from middle of this place. No, you take trades from key level, because one, it gives you a better risk to reward. At least know that I'm putting my stop loss somewhere here or so, and I'm trying to long the market at this portion. And secondly, it helps you. In fact, it helps you when you're building a strategy, in the sense that you prevent all the useless trades that have been taken from these portions. Okay, at least gives you this is what I'm looking at for if I can take a trade. So that is the importance of key level. So I'll be looking at weight somewhere here. Okay, since market have reacted somewhere. So this could actually be a key zone for now. Okay. Now, if the market break it, now let me ask you now, if the market break it, where would you be looking to? All right. I know you got it. Okay. So I was also be looking at somewhere here, because the market have already reacted here before. Now I believe it's beginning to make sense now. I believe you guys are getting it now. Okay. So we need the previous reaction for us to try to predict the next reaction. But that is not just it. Like I tell you, just because it's two, it's not okay. Okay, I like to wait. Let's say when it gets the market start going down and then start going up again. Now I'm more sure that this is a key level. Identifying key levels in the market. Do you guys understand me now? Okay, so if the market did something like this too, I would have been okay. Now, since the market have done this, it's very likely that it's going to react here again. Now, the reaction does not mean that it's going to just get here and say no. It can also get here. Okay, it can also get here, just play around and continue upward. Especially if it was an uptrend before. Guys, I'm not teaching you how to trade it yet. I'm telling you about to know, this is a zone that we can be looking out for in the market. This is a zone that I should be looking out for, maybe confirmation or confluence or any of that. Okay, key levels in the market. So let's just jump down to a lower time frame. Okay, for those that trade, let's just go to 4 hour and look at this. Like I told you, your key level is solely going to depend on your time frame. Okay, so let's say I was within this zone or within this portion, and the market did this. It's going down, coming down. Remember, like I tell you, we can only just guess here. We are not really so sure. because of this one, we're not really so sure. It can easily break it. But what makes us sure is when I see the market coming back for the third time, we're not like, okay, since there's been a reaction here, well, I'm very possible, very likely that there's also going to be a reaction somewhere here. Now, like I tell you, that there is a zone does not mean that that's what is going to hold. Okay, it can just get here, play some more, then come down. You always see it in the market, usually if we're in a downtrend before. I'm going to teach you how you can trade, how you can look at these key levels in perspective. Do you understand me? But I'm just telling you that, okay, how to know that, okay, this is a zone in the market. So you start, I'm not just looking at all these places, all this place, all this place. No, I'm not interested in all those things. I'm looking at what the major levels. Okay. Now you see that as I change time frame from the daily time frame to 4 hour, my key levels tend to change a little, kind of come down a little. Okay, and if I go to 30 minutes now, if I go to 5 minutes, that's where you now be seeing all these small key levels. That's where these small key levels in this place now will not be a little important, because now I'm not looking at a a zoomed view of it. I'm looking at it now zoomed out. So I'm looking at it now zoomed out. You understand me? Then I'll not be seeing it as what? A very big zone. Because if I go to 5 minutes, this place is going to be very big. So you get it. So it depends on your time frame. And you need a reaction to what? To get a reaction. So let's go to another market quickly before I end this video. Let's look at this. SJPY have been, well, bearish. It gave me a loss because I was expecting it to respect that zone, which it did not. Okay. So now let's first go to a daily time frame level here. Now all this, let me just delete all this. Now we say is a key level here. Okay. A key level, like I told you, is where the market have made probably 2 reactions. So there was a first reaction here, and when this market started coming down, somebody would have guessed that, okay, maybe we'll see another reaction here. Okay. Are you getting it now? And the next place that I've been looking for a reaction is when market started going up. That said, okay, there was a reaction here, so maybe there will be a reaction here, which did not happen. Okay, market did not get to that place before even reacting. But then, if you look at it now, where are you expecting the next reaction or the next row? This is our next key level, and this market is what is trading to. Okay, this is the next key level that we're looking at it to trade to. So you understand now, this is how we can find the key zones in the market. Now, there are other situations. This is a horizontal kind of key zone. There are other situations where it can be what? It can be kind of like diagonal, okay, or transverse. Okay, you have seen, okay, the market did something like this and did something like this. You expect to also do something like this somewhere in the future. It's called a trend line. Okay, it's called a trend line. Do I get this something like this? This something like this. You expect to do something like this in the future. It's called a trend line. These are also kind of key levels, okay? But I don't really want to major on that. But today I want to actually just tell you the ones where you're looking at the market from a bigger view. Okay, now I zoomed out on the market and let's look at it. Let's say we're here. This market was doing this. Okay, I decided comment down. Where would you have said is your key level? At this point, I'm not really sure. I would have known until the market did something like this. Now, when market was going up, what would have been my key level? I would have been looking, okay, maybe might hold here. Might. But I am not sure it would hold at this point. Now, just like I was telling you, when the market come back to these key levels that we are talking about, okay, like I tell you, market must not respect it to go down. It must not go down. So the market will just get there, clear along, just play small, and continue going up. That's what I told you before. Okay? You can just play along and continue going up. So when you get here, that's where we'll now look for something I call confirmations or reasons for you to now maybe sell, buy, or whatever. That's going to be part of the second video for this series. Okay? You get it? And if you look at it now, these skill levels are kind of like working together. After this, there was this, there was this. I would have been looking at this, but it did not come down to that place. So it came back up, and I was also looking at this. It played there and went up. Okay. But before going up, it left this. Now I'm not looking at, okay, maybe it might come back to this. Maybe. Okay. Now understand that these portions, at this place, you are not really so sure. Like I tell you, you are not so sure because it's just 2. Okay, I tell you that you're more sure when it comes to 3. So if it's come down now, I am more sure that it's going to react here because I've already seen a reason. So this place become a key zone for me. Okay, and also as I'm tracing, okay, this place is also going to be another key zone from when the market starts going back up. Identifying key levels in the market. So, for the purpose of the time for this video, I don't want to take so much time for this video, but I just believe you caught what I was trying to say. I just believe you actually understood what I'm trying to say. Okay, let's just look at just one is up, one is up. Okay. So I just give you this so that you tell me your key levels or where you expect the market to come here. So look at it, okay? Look at it and just try to just identify the key level. Say it to your mind. Okay, say it to your mind. I know that there's no way I can ask you to make it a comment, but say it to your mind. You can see that there were key level here, here, and here. Okay, and the market is also returning to a place where we know that it's a key zone. Why? Because there was already one here, there is two here, and the next one is going to be where? You know it, right? Here. So this is already a key zone now. It's not that hard. Okay. You already know that, okay, this, it came here, reacted. So we already expected it to react here. So it becomes what? A key zone. So when the market comes back here now, it's a key zone. You know, we're looking at serious activities in the market. And when the market start going back up, we also look at this key zone because they've given us 3 before, meaning very likely it's going to keep up 4. But remember, like I tell you, you can just get to this portion and just go up. Okay. Or you can also come to this portion and what? Go down. So this is it guys for today's video. Don't forget to like and subscribe so you stay updated when I drop a new video, and also share my links to your friends, to your people, to anybody you know that is also struggling with trading, to make it easier for them. And also talk about the trading ebook every time. It's going to be in the description and it's going to be in this video. This is your answer. If you are still struggling in trading, this is your compass to success in trading. Okay, so there's a link in the description to get the book if you're interested. And until then, see you around.